Hi there, welcome to Kneppy Invest and welcome to July the 2nd, 2024. We have about 1 hour of normal trading left today and then 10 minutes in the closing auction. And I am a little bit surprised. I expected an okay day on the markets today in Australia, particularly among tech companies. Pretty ugly day yesterday. Tech was down big. But the Nasdaq had a little bit of a rally, up 0.66% overnight. And I thought that positive sentiment would translate to our market. But no, tech is down. Also, resources are down as well. Now, hopefully, this will be a shorter video because I do plan to do an answer reply video after this as a separate video, release that on Wednesday or Thursday morning. And the reason I think this can be a shorter video is because there were no really big announcements that really saw any significant movement in share prices of companies today. But I have come up with the top 5 announcements of the day. But before we have a look at the top 5 announcements, no Twitters or tweets, but I will have a look at the ASX Today, the best and worst performing indices, sectors, and companies. Then we'll go into the top 5 announcements of the day. And then I'll go through some of the charts of companies that I'm following quite closely as potential trades. So about 8 of them I have written down. Doesn't mean I'll get through all of them, but these are companies I'm looking at on a daily basis. Okay, so let's start looking at what's happened on the ASX today. And we'll start with the indices and sectors. And in fact, at start of the day, tech was up a little bit, but a bit of negativity during the day has forced our indices down, but has been a bit of a rally since about 1:30 p.m. Did something come out at 1:30 p.m.? I have no idea. Anyway, energy. Oh, look at energy. Up big, which probably means Woodside and Santos were the best performing companies in the ASX 20. We'll have a look at that in a second. Utilities okay. Staples flat. Real estate down big. Materials down as well. And also discretionary down by over 0.5%. So real estate down big is an interesting thing because usually there is a good correlation between real estate and interest rate expectations. So there is increasing expectations that interest rates will rise in August. I think that would be a mistake. That's just my own personal opinion. And I don't think it's a certainty. I probably would say maybe 50-50, but I'm not an expert. Gold's had a good day. When I say good, up 0.24%. That's the only major index in the green. But if we expand the indices, have a look at them all, we'll see a few others up, including energy, utilities, all ordinaries gold, emerging companies, and the ASX 200 resources. And of course, the worst performing indices have to do with real estate. So real estate sector, REIT, consumer discretionaries had a bad day as well. And that's sort of understandable because you would think discretionary companies would suffer a little bit more if interest rates kept on rising. Okay, so let's have a look at a quick look at the ASX 20. Where are we? ASX 20. So we're probably, I'd say 12 companies down, 8 up. Let's have a look. 12 companies is down, up, got that wrong. And without doubt, we're going to have Woodside up, Santos up, and the worst performing company, I'm going to say Goodman Group because it's real estate. Let's have a look at the best performing ASX 20 companies today. There we go, Woodside and Santos. WiseTech's had a nice little bounce, as had Real Estate Group or REA Group. Both of those are tech companies. So obviously other tech companies have not really done well today, comparatively speaking. So if we're just focused, or tech was just focused on WiseTech and REA Group, a good day. Worst performing companies, there's Goodman Group. I got that completely right, didn't I? So yeah, it's obvious just based off sectors. If you know what companies in a sector and that sector has done really well or really bad, then you have a pretty idea which companies have done well or bad. And I'm a shareholder of Goodman Group, but I'm also a shareholder of WiseTech and REA Group. In fact, I am planning on doing a video where I rank all 20 companies in the ASX 20. And I can tell you right now, WiseTech and REA Group are near the top of that. And Telstra is near the bottom. In fact, near the bottom is also Woodside and Santos. I've already ranked it, and I'm a little bit biased, but yeah, I am planning to do that video eventually. Not sure when. Anyway, so let's have a look at the best performing and worst performing companies on the ASX. And I don't expect much surprises among this list of companies. Okay, so let's have a look at top gainers, and not much movement here. In fact, fairly low turnover I did notice Redflow released an announcement today. Can't remember what it was, but I did say the name. And Redflow partners with Stanwell Corporation. Now, I don't really follow this company all that much. They are a battery company, if I remember correctly. Pretty sure there's something to do with batteries. And the chart just looks pretty bad. That's one of the main reasons why I don't really follow this company. And even though I did see this announcement, I didn't have a close look at it. I'm pretty sure they do batteries. Gauges and sale manufacture and ongoing development of its zinc bromide flowing electrolyte battery. There you go. But the chart speaks volumes. And this is the type of announcement that I would not get that excited. So even though the share price is or has rallied today, not for me. So if you are interested in batteries, if you think that is the future, and any company, in fact, National Battery Strategy down the bottom here, and if you think any company that has its toes in the battery door is going to perform really well, potentially, and if you've never heard of this company, potentially this is a company, and this is sort of announcement you need to look at. So the whole point of me doing this video is to share ideas with you. This sort of company, this sort of announcement does nothing for me, but maybe it does something for you. We're all different. We're all different. We should all have different strategies, that sort of thing. Otherwise, Marley Spoon, I'm pretty sure they want to delist because things have been not going well for them. And I can't remember. Oh, there's Infinity Resources again. Another good day for that company whose share price was up over 100% yesterday, up again 19%. That's usually a good sign. We haven't seen any profit taking today. So that means there is good chance. I think the company share price could rally even further from here. But I would like to see a little bit of a dip, or at least a share price going sideways. I will have a look at the chart of that company at the end of the video. I actually did write it down. So I am following that company's share price movement a little bit more closely. But you can just see nothing much. No excitement here. Low turnover. A lot of who cares from me. So let's have a look by market cap. Liontown Resources. I did notice. Oh, there's Drone Shield coming in number 2. I did notice Liontown Resources did have an announcement released at 1:56 p.m. Strategic partnership to deliver long-term funding, and they also released a presentation. So that did not make it in my top 5 announcements simply because they released at 1:56 p.m. And I come up with this list at a little bit earlier than that. More likely, I come up with this list or develop this list by about 10 a.m. So 1:56 p.m. was a little bit too late, but a nice little rally in the share price, up 11%. Let's have a look at a chart for Liontown. And I have a feeling this chart's not going to be that good. It was $1.20, $1.30 not that long ago. Yeah, look at that chart. It's still in a downtrend. Broke through the potential uptrend back on the 5th of June at about $1.25. And in fact, there has been a little bit of selling today. So a little bit of selling. Share price got as high as $1.05. Now down below. Is it below? Let's have a look. Is it below $1? Yeah, below $1. $1 will be a natural resistance level for this company. And again, this is not the sort of announcement that I get too excited. Partnership to deliver long-term funding. A lithium company, and again, if lithium does nothing, this company won't succeed. Lithium prices have to increase from here. Now, I could be wrong because I don't know this company absolutely. Maybe they can be profitable at current lithium prices, but I am dubious about that particular statement. Doesn't mean it's going to be wrong, but I am dubious. So Liontown's had a good day. Drone Shield, another good day for Drone Shield. Arabanda, I was thinking of including this company into my top 5, up 9.2%. And the reason why is share price had been rallying. We saw a little bit of pullback in the share price. I thought maybe it's an opportunity to buy this company. And they released an annual mineral resource and oil reserve statement, 62 pages long. So for those who really want to look at all 62 pages, maybe you can read it and give us a summary. 1-page summary, maybe not a 5-page, 1-page summary. Now, the reason why I decided not to include this company in my top 5 announcements simply because I didn't look at the announcement, and this could be just a bounce. It couldn't be the share price increase today may not be because of this particular announcement. It could just be because there's been a little bit of weakness in the company's share price, as the share price is in a long-term uptrend. Would you call this a long-term uptrend? So it's been uptrending for about 8 months. And I was just thinking, share price down 10% yesterday, and I think this is maybe just a bit of a bounce because the share price has slipped a little bit over the past 2 weeks. What else has happened? Southern Cross Gold, that has been on my radar for a while. SmartPay's had a good day. E-Road's had a good day. Oh, E-Road. We have to look at E-Road. So this is a company I'm trading, and I was waiting for the share price to get above $1. It's done it today, up 11.46%. So this could be a breakout. And as we go further down the list, Argenica Therapeutics is on my watch list, up 11.3%. Maybe I've missed the buy the dip situation with that company. And SDI, the company that has come in at number one on my top 5 announcements of the day, share price is up 9.6%. I'm glad with that, happy with that, because they did release some sort of trading update or preliminary results, and it looked actually really good. So happy that company's on the list, and that's all she wrote. So let's have a look at the worst performing companies today. Reese Pharmaceuticals, not on my top 5 announcements, but they have announced a capital raising, I believe. There it is, Reese Pharmaceuticals at 10:23 a.m. Placement and SPP to raise 10 million funded to financial year 26. We'll just open up this announcement. Share price currently for that company is, I didn't actually have to do that. What was it ticker code? REC? No. RCE. So the share price is currently 48 cents, down 20%. So I would expect the capital raising to be done at about between 45 and 48 cents. So let's have a look. There we go, 45 cents. Yeah, straight away, 45 cents. The reason why I said 45 to 48, I didn't expect the capital raising to be done at a higher price than 48. There's a possibility the share price could be right at the capital raising price, but a lot of times you'll see the share price just above the capital raising price, unless there's a lot of negative sentiment in a company, and then the share price will be below the capital raising price. So if that was true for this company, the share price would be down probably 25%. I'm just going to have a look at the chart for this company. Was this a good capital raising? I can tell that just by looking at the chart. And I wouldn't say it's a horrible capital raising. I probably have to do it. Share price is really doing nothing. Look at in fact, the share price, if you look at the weekly chart, it's been in a downtrend for a while. So that's Reese Pharmaceuticals down 20% today. Otherwise, EZZ Life Sciences in this list, but it's okay. Share price in an uptrend. We're going to see a lot of volatility. In fact, talk about EZZ Life Sciences and the volatility. Just let's have a look at the daily or the trade history. And you're going to see the share price up and down by over 10% quite often in the past few weeks. In fact, the last 2 weeks, we have seen 1, 2, 3, 4, 5, now 6 days where the share price has been either up or down by 10%. But 4 of those days up, 2 of those days down. So a fair bit of volatility in this company right now. And we can see that just by the chart. There was an interesting comment, the only comment I will mention today, interesting comment by, if I can make it, if I can find it, not make it, find it. I probably, from AU5657, bizarre sell-off today across all the winners last year. All Asian indices were green and the tech sectors are nowhere sold off like ours. Weird. I actually noticed that. A lot of the best performing companies last year were sold off yesterday. And I was actually thinking, does this mean, or is this an indication that a lot of investors wait to the day after or the start of the new financial year to sell their winners? Because that means they don't have to pay any capital gains tax until the next year. I don't think that could have been what's happening. A lot of people just waited until the start of the new financial year to take profits in these companies. We saw quite of the few best performing companies sell off yesterday. EZZ was one of those companies and it sold off today. This is the chart for the company. A beautiful rise, and you can definitely see some volatility. And this sort of pullback is to be expected. Definitely to be expected. So that's EZ Life Sciences, company I'm trading. A few other companies, interesting companies here. XRG and Acrow. I'm just going to show the chart for these 2 companies. XRG has been, looked like it would, yeah, it did break out. Big volume coming in the last 2 days. And again, this could be just profit taking, although share price hasn't risen that much. So down 9% yesterday, down 12% today. And what was the other one? Okoda. Now, this is a little bit different. There was a bit of an uptrend to this company, but it's turned negative now. There it is. Beautiful uptrend from the start of 2023 all the way through to the start of 2024. Share price rallied a lot. And just look at how the trend has shifted from positive now to negative, and the share price has kept on falling. Okay, so that's Okoda, ODA. There's RUL, RPM Global, down 11%. This is another company that has rallied big, or did rally big last financial year. And I can't remember if it sold off yesterday, but potentially, oh, there's big sell-off. Something's happened to this company that I missed. Let's have a look. RPM. No, here it is. RPM Global. What's happened with this company? Update. Oh, there you go. I completely missed this. Update on software sales and expected financial year 24 result. I completely missed it. This is the company I own, and I completely missed it. That is ridiculous. 9:44. Why did I miss it? There it is, right there. The sort of announcement I like. And this is the whole reason I go through this process, because sometimes I miss announcements. And this company did not make it in my top 5 announcements of the day. So this is more understandable now. So let's have a look at RPM Global. So we'll call this an honourable mention. Is pleased to provide the following update on total contracted value, 50.4 million. Expected TCV sold 77 million. Okay. Going through this, expected gross revenue finished between 113 and 114 million, up from 98 million. EBITDA between 18.7 and 19.3 million, 15 million last year. Profit before tax in the range of 14 to 14.5 million, 9.2 million. The lower than forecasted profitability is due to reduced perpetual license sales and the timing of subscription licenses signed during the second half of financial year 24. There you go. So the numbers are a little bit lower than expected. Hence, the share price has fallen a little bit today. But the share price has rallied. Share price fell to as low as $2.20, which is a really important level. They say technical analysis doesn't work. Share price fell to, see this dashed line here. That's, you just see the share price oscillating above that, above and below that level for about 2 months, back in March and April of this year. So that's a very natural support resistance level. And today, the share price hit that level and bounced. Significant bounce. In fact, let's have a look at the minutes, the 1 minute data. Yeah, so the share price bounced at about 10:20 a.m. or started to bounce at that point in time. I can't believe I missed this particular announcement. A company I own, and I completely missed a very important announcement. Now, I wouldn't have sold out on this particular announcement, because if you go back to the chart, share price is still in an uptrend. And the very fact we had a really good bounce today is a sign that initially the market overreacted. So no reason to worry about this company just yet. Anyway, missed that one. Can't believe I missed that one. RPM Global. Now let's have a look by market cap. Mesoblast down. So I'm just going to have a look at, no, we have a few companies here. I won't have a look at all these companies, because I'll have a look at these companies after I finish recording these videos. And Crisis Corporation also down. Rice Growers down 6.7%. Immutep, another bad day. Mayne Pharma. Mayne Pharma did make it into my top 5 announcements of the day at number 5, down 4.96%. Duratec is down. That's interesting, because that has popped onto my radar, because it looked like the share price wants to rally. So this could be a buy the dip situation. And there's Actinogen down today. I will show you that company's chart as well. Clearview, another company. Biome, another company whose share price have been in really good uptrends. And we have seen a little bit of sell-off today. That could be a good sign. A good sign, particularly if it's on low volume, that the share price is pulling back a little bit and could lead to an opportunity to buy these companies in the next few days. Okay, so let's get to the top 5 announcements of the day. And I'll be honest with you, RPM Global would have made it into the top 5. In fact, it could have made it to number 1, to be honest with you, because of the reaction from the market, but I completely missed it. But that's the whole reason I go through this process, as I mentioned before. So I'll start off with Mayne Pharma. And I'll tell you what, this company has been a disaster the last month. Woof, 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 woof. why do we say dogs? Dogs are great. And the reason it's been a disaster was from this presentation on 13th of May. And it was not marked sensitive, but it was sensitive. Or maybe it was a market update. I forget which. In fact, we can tell. I can tell you right now. Actually, not right now. Anyway, class action settlement. So apparently the shareholders were not happy with this company back between 2014 and 2016. Well, they were not happy because of what this company did between 2014 and 2016. And they have to pay a fair bit of money here. And that amount of money was 38 million Australian dollars. And they actually mention here, the settlement is without any admission of liability by Mayne Pharma, both respect to the alleged underlying anti-competitive conduct in the United States and the alleged misleading or deceptive conduct and breaches of continuous disclosure obligations, and is subject to court approval. So they're saying, well, we're going to pay this money, but we're not admitting guilt. I think this, well, I can understand why they might do it, because the legal cost could be quite a bit. So this was between November 24, 2014 and 15 December 2016. So what I'm going to do now is have a look at the chart. Did the share price tank it during that period? So let's go all the way back, before we have a look at an updated chart, all the way back. Tell you what. So here, November, this is November. So November, there was a date, the 27th of November, share price dropped 16%. So 24th of November to the 15th of December, 24th of November. So just before that. And then the share price went on a beautiful run after that. And by December of 2016, the share price was actually significantly higher, it doubled. I'm not sure what's happening. I thought maybe the share price would have collapsed or fallen a fair bit, but then look what happened just after December. This could be what the initial people who brought this suit against Mayne Pharma were thinking, that, look, the share price went into a downtrend from November, December 2016 and has been crap ever since, hasn't it? So, yeah, so maybe something bad happened in that period. But anyway, they have to pay a lot of money. That's a lot of money. And have a look. Let's have a look at the updated chart for Mayne Pharma. So I was thinking things were turning around for this company. Share price looked like it was moving into an uptrend, but look at that chart. And really it started on the 14th of May. Yeah, the negativity started on the 14th of May. So what happened on the 14th of May? Yeah, it was a presentation. That presentation at Citizens JMP Life Sciences Conferences, 22 pages long, was not marked price sensitive, released at 4:22 p.m. Selling began the next day and has continued since then. Share price has dropped from almost $7. In fact, it was $7 the day before the 14th of May, whatever the day was. What day was it? Yeah, 14th of May, and is now at $4.40. So significant sell-off in Mayne Pharma. And fortunately for Mayne Pharma, or maybe unfortunately, you made it in top 5 announcements of the day because I completely missed RPM Global, but that's okay. Coming into number 4. Now, 2 of the top 4 announcements are companies I do own, and we come up with at number 4, Superloop, up 1.93%. But they did release a trading update. And I suppose this was a pretty good trading update. Not the best trading update, but at least it's a good, positive trading update. It wasn't negative. That's the main thing. And they're pleased to provide this. I have seen some management or marketing teams of companies include the word pleased when they're releasing bad announcement or bad news. Don't use that word if you are releasing bad information that's going to see the share price tank. That is probably one of the worst words you can use, because you should not be pleased. Anyway, so pleased to provide the following trading update. And I did go through this. It sounds really good. For instance, they acquired the Origin thingy, whatever it's called, from home broadband services from Aussie Broadband. And Aussie Broadband share price, by the way, is down a fair bit today. So I wonder if that's related. Oh, it was down more than that. Yeah, share price got down as low as 326. I was following that because I just wanted to see if there was a negative reaction from Aussie Broadband, because they lost this particular contract with Origin. And they just mentioned here that at the time of the contract signing with Origin, Superloop advised that the Origin broadband customer base was approximately 130,000 customers, Origin recently commented that their broadband customer base now exceeds 150,000. So does that mean there's been significant growth since then? And they actually also mentioned, which demonstrates Origin's continuing growth in the category. And did they give numbers? Yes, here we go. So underlying EBITDA for financial year 24 is expected to be at or above the top end of the 51 to 53 million guidance range. So not quite an upgrade, but possibility is there when they do release their results. If it's above the top end, that these results will beat expectations, and the share price might rally on that. So let's have a look at the chart for Superloop. On the release of one of my favorite types of announcement, a trading update, but not quite my favorite, which is a profit upgrade. So this is a chart for Superloop. A little bit of selling today. So the share price was up probably about 3-4%, and we have seen a little bit of selling, and that's 2 days in a row. We have seen selling during the day, but this is a great chart. And in fact, I took a position in this company at 80 cents. It's currently $1.57, so almost double from when I took a position. But I have taken profits, and that was a mistake. I should not have taken profits. That's the one thing I am going to try to do this year, not take profits. Just let my winners run. And I should have done that with Superloop. Okay, so that's coming in number 4. We have Superloop. Coming in number 3, Shape Australia, up 3.1%. Another trading update. Now, I'll be honest with you, this probably would have been higher if I didn't own it, because I was impressed with this trading update. But I thought I'm going to keep my bias out of it and, in a way, punish this company because I do own it. I am trading this company right now. Share price in a beautiful uptrend. Now, some people have said, oh, it's too illiquidly traded. I don't care. If they keep releasing announcements like this, the share price will keep on rising. Not only that, you're going to see more fund managers get interested in the company, and because it's illiquidly traded, the share price could go on a really good run from here. So they're just going through project wins, revenue, EBITDA, NPAT, backlog orders. One of the most interesting thing is revenue was a little bit lower than expected because of delays in commencement of some projects. And I thought, because that was right near the top, and I thought, oh no, this is going to be a negative reaction from the market. But they also went into EBITDA and NPAT. And that lower than expected revenue did not impact EBITDA and NPAT. In fact, the EBITDA is expected to be significantly higher, 25% higher than last year. NPAT is expected to be 40% higher than last year. So the margins obviously have risen from last year, and I love to see that. So revenue down, but because of greater margins. And I actually mentioned here, despite the lower revenue, Shape has demonstrated its resilience by sustaining margins through operational efficiencies. I would even say margins have increased. That's the only way you're going to get increased profit and EBITDA if your revenue has dropped, to have increased margins. It's by definition, that's what's happened. Okay. So I actually like this announcement. I thought it was really good. Not surprised to see the market react. And I think the market sort of expected this, to be honest with you. And this is the chart for the company. And it's a great looking chart. There's me buying $1.86. And some good volume coming in today. That's what we want to see. We want to see some really good volume coming in. And this is a good chart. Nice looking chart. And I've held this now for almost 6 months. So that's coming in number 3. We have Shape Australia. Probably just the name. I like them to change the name, but I'm being a little bit picky there. A company I don't own, but I was actually looking at the other day because there was a pullback in the share price. I went, is this a time to think about taking a position with Acrow? I'm pretty sure they used to be called Acrow Frameworks and something else. Now it's just called Acrow. That's good. So Acrow, share price is up, and they released an announcement. They achieved record secured hire contracts and pipeline. And I like this announcement too, not as much as Shape, but I do like this announcement because this is just talking about contracts, not talking about numbers. Just talking about contracts, not numbers, and just an increase in contracts for the previous corresponding period. So let's have a look at the chart for Acrow. This is probably the most interesting thing about this company, is the share price of Acrow has been in a beautiful long-term uptrend. So when I say long-term uptrend, we're talking about years. So there's the breakout. Here it is. There it is, zooming in. So the breakout for this company occurred on the 1st of July 2021. We are talking about 3 years ago. You could have bought Acrow for 30 or at 37 cents. and you could be almost up. This could be a two-bagger, a bagger. And there's been no point during that time period where this has been a sell. Now, we did see the share price pull back from the highs we saw back in March. Share price got to about $1.35, and we saw the share price get to $1.05. And I was thinking, ooh, this could be a buy the dip situation, fairly similar to what we saw back in the middle of last year, and fairly similar to really any other time back here. So that's probably the more analogous period just here. So a little bit of a dip, and then the share price started to turn upwards. So I'm thinking, is this the catalyst for the share price to move back into an uptrend for Acrow? Possibly. Some nice volume coming in as well. So definitely have that on my radar, this company on my radar. It's been on my radar for a long time, but I've never had a position in Acrow. Okay, so coming in number one, we have SDI. This company, was it a trading update? Yeah, a trading update. They actually amended it. And I actually did like this. The only thing going against this company is the chart. We'll have a look at the chart. But this was a good result. Nice growth. This has got a company, small cap company, you want to see growth. This company is profitable and they're growing. So, revenue. I'm pretty sure they do dentist stuff. They sell stuff to dentists. I don't know. I can't remember what stuff. In fact, they don't have an about section. Put an about section in your announcements. But I'm pretty sure you can just see the motto here: "Your smile, our vision." So maybe they do stuff with eyes too, or maybe it's a dentist slash optometrist. That'd be a pretty interesting job. Look at your teeth and your eyes at the same time. Your smile, our vision. Oh no, it's their vision. If it was your smile, your vision, but it's our vision. So maybe this is dentists and optometrists seeing each other. Interesting. Anyway. Okay, so revenue or sales, they call it, unaudited sales, by the way, up 3.2%, not a lot, to 111.4 million, but it's 111.4 million, and it is an increase. But more importantly, and I mentioned margins talking about, who was it? Margins talking about, was it Shape Australia? And in fact, they mentioned margins here. During financial year 24, product margins increased by 490 basis points, reflecting further improvements in logistic costs, operational efficiencies, which is the second time we've heard someone use those terms, operational efficiencies, regional market performance, product mix, and favorable currency movements. So I like this: revenue growth, margin expansion, which means profit should have increased by a greater amount than 3.2%. In fact, it has. So profit has grown from 7.1 million to between 9.5 and 10 million. So a significant increase, a greater increase than 3.2%. In fact, that's probably almost a 33 to 40% increase in profit. So a good half year, looks like it's a half year. Yeah, half year results for SDI. Wait there. It's interesting. Today announced their preliminary sales for 12 months ending 30th of June, full year, but then they say the half-year results will be released on the August the 27th. So they're talking about full-year revenue or sales, but then half-year results in August. Yeah, anyway, let's go to the chart for SDI, and probably the only negative about this company is just the chart. Yeah. So share price going sideways, no trend, and unfortunately, this is not a breakout. And the thing I'm looking for is breakouts, and this is not a breakout because the share price has been higher than this over the past 2 years. In fact, significantly higher back in 2021. So not quite a breakout for SDI. Really good volume coming in, however, but you can see the effects of the share price being higher quite often in the past. We have seen a bit of selling. If the share price was at a 1 year high, I think the share price would be right now at the day's high. This is the effect of resistance, the effect of shareholders buying at higher prices in the past. That is resistance. They're selling out because they consider this company a dog stock because the share price fell after they bought. That's the primary thinking of most investors. If the share price falls or drops after you bought, it's a dog stock. It's not your fault. It's the market's fault or the company's fault. And that's the problem. You have to think psychology and that sort of thing. And at this point in time, it's not a breakout. Share price was these levels in May. Yeah. So that's the top 5 announcements of the day. Sorry, RPM Global, completely missed your announcement. Now let's have a look at some charts. We'll do this fairly quickly, I suppose, because I just want to do that answer and reply video, about 20 minutes long. So let's have a look at a few companies. So LIN, this is what I want to see. I don't want to see any significant selling after company share price rose a lot today. And that's exactly what I'm saying with Lindian Resources. A really good day yesterday. Not quite a breakout, very close to a breakout, but we haven't seen any significant selling today. So this is a potential trade for Lindian Resources. Same thing might be true for IA8, Infinity Resources. Another good day for this company. So 2 good days in a row for this company on really good volume. Share price was high when they IPO'd back in January. That's my only concern. We still have all those people who bought on the day they IPO'd who's still holding, but the increase in supply of shares on the market has been met by demand. That's why the share price has rallied today. There's more demand or more enthusiasm of buyers versus sellers. That's a probably good way to look at it. The enthusiasm of the buyers is greater than the enthusiasm of the sellers to sell. So that's Infinity Resources. We'll look at Botanics. We did see a bit of a dip. Is this a time to buy? Oh, we have seen share price rally today. A little bit of a rally, but not much. And the share price has just moved into my buy zone, which is this green shaded area, short-term moving average channel. It's moved into that, a little bit of a dip. So hopefully the share price will rally from here and get to a new high. I want to see the share price get above 40 cents. Botanics, ENR, Encounter Resources. This is not a buy dip. Yeah, share price has dropped today, but this is a good looking chart. The time to buy this was a few days after they released the announcement on the 24th of June. Share price dipped a little bit, then rallied 3 days after that. And we have seen the share price pull back today. This is a good looking chart. Good looking chart. This would be like a supermodel chart. Well, maybe not. That's not true. It's only been in the business for a short time, but this is a potential breakout. ENR or Encounter Resources. Actonogen. And I expected eventually pullback. Now, this little pullback today is on much lower volume. That's a good sign. I think the buyers are saying, well, we're just going to pull back a little bit just to see what happens. And some of the sellers are going, well, I'm going to take profits now. The share price has gone on a run. I'm going to take profits. But we haven't seen a lot of profit taking today. Share price only down 9%. So you might say that's down a fair bit. But the share price has rallied a lot. So this could be a buy the dip situation in the next few days. But just look what happened back in February. Share price went on a nice run and the dip continued for a while. The dip just kept on going until the next rally. So it's Actonogen. BioMe has had a good run. I expected a pullback today, but this could go on another run tomorrow because the chart looks pretty strong. This is a supermodel chart. Biome. Another company, Hytera, sort of white hydrogen. This chart is looking really intriguing. I find this chart really intriguing and the volume. So definitely have this on my watch list. And then Argenica. Oh yeah, look at this. This is a perfect pullback into the support zone, which is the short-term moving average channel. And today, share price has rallied 9.9%. Not big. Not. I probably would like to see bigger volume coming through today. So the sellers have pulled back, saying, "Well, share price has pulled back. We're just going to wait to see if buyers are now interested." And not many buyers are interested. And finally, E-Road looks like this could be a breakout. Now, let's have a look at the chart. Just going to see the share price still up above $1. Yep, it's up. But we did see a little bit of selling coming in. I just wanted to see if there was a bit of selling. Yeah, there was a little bit of selling, but not a lot. They're all from GX. So all the selling is from GX. But this is the sort of chart I'm looking for. This is the breakout. I might put in another sneaky bid to add to my position. So I was waiting for the share price to get above $1. I bought in at 90 cents, somewhere here. Which day was it? It was just here. It's just around this breakout. So this cross, black cross, is a breakout. No, it's not a breakout, it's a cross. A moving average cross. So if I see a moving average cross and a breakout happening simultaneously, that would be an almost automatic buy for me. But we have seen a breakout today. Share price at a long-term high for eRope. And I'm going to have a look at Mesoblast, Crisis Corporation, and Duratec. I'll just have a look at Duratec really quickly. So yeah, we did see the share price started to move up, and now big sell day today. So less enthusiasm about Duratec. Okay, so that's all I've got for this video. If you have any questions, any thoughts, leave them in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye. I'm just writing stuff down.